We've all been seeing these headlines lately. But how has the real estate market been living up to the expectations of the 2022 real estate market crash? It is finally September, which means we can wrap up this doldrum of a summer real estate market in Denver and put it behind us. If you don't know who I am, I'm Alex Saldana, Denver real estate agent, investor, house flipper, working with hundreds of properties and homeowners over the last decade and providing the most up-to-date information on the Denver real estate market. Now, if you've been paying attention to headlines lately, we've seen them all: housing market crash, whatnot, interest rates rising. But what are the real numbers when we look into them? Has the market been living up to the expectations? So we're going to go in and we're going to look at the Denver market specifically, because we are in a little bit of a bubble here because our economy is great, our property taxes are low, it's a really desirable place to live. But then we're going to zoom out a little bit and let's look nationwide at what else is going on in other parts of the country to see if we've truly been living up to these horrible headlines out there. So what we're starting off with here is looking at the median close price for the entire Denver metro area, which it peaked in April at $600,000 and now we're down to $560,000. So our median price has dropped by $40,000. Not quite 10%, but we might be approaching that soon. So what is the driver of price though? Simple supply and demand, folks, and that is the amount of listings that are on the market. So what we're looking at here is the amount of new listings to hit the market. In June of this year, we peaked out at about 11,500 new listings to hit the market. However, we have slowly dropped the amount of new listings coming onto the market. August was at 8,200, down from 9,700 in July. So that's more than a 10% drop in the amount of new listings hitting the market. I love to see that sign. And if we zoom out over the last 5 years, we can see cyclically every single summer we get a peak of inventory. So, on to the amount of active listings, which is going to drive as well the price of everything on the market. In July, we had a peak of 13,350 active listings on our MLS. In August, that dropped down to 11,900. So that's about a 10% drop in the amount of active listings on the MLS in Denver, which is great news, once again, in my opinion. Now we can zoom out on this, and we're looking at 3 years. We can look at the past 5 years. Let's look at the maximum amount of time. To put this really into perspective, folks, the amount of inventory on the market currently is pre-pandemic levels, meaning it was strong in 2019. Everybody loved the real estate market in 2019. We're still not at 2019 levels for the amount of inventory on the market. So once we balance out a little bit here, I'm still pretty hopeful that we remain decently strong. Now, looking at the number of pending listings, we can see in May we had 8,600. Then we really started dropping down to 7,000 in June, 6,600 in July, but then we ticked up to 7,300 under contract in the month of August, which is more than a 10% increase in the amount of listings that are pending. Now, the number of closed listings, this has been the big driver of the inventory and the pricing in Denver. If you follow me, you know that the closed listings in Denver is driving all pricing. We can have less inventory come on the market. However, if closings continue to drop, it's still going to force pricing downwards. So what we can see here, we peaked out this year so far with closings in May, and we've been steadily dropping since June. We had 8,200. July, we had 6,600. Now, August, we squeaked up just a little bit up to 6,700. Now, historically, this is the number that is quite a bit off. Now, what we usually like to see in June, July, and August are some of the highest closed in the Denver market, like we can see in 2019, 2020, 2021. All of them had their peak closes in the summer months. However, this year, we hit it a bit early in May, and then we have dropped down. So we're going to watch this closely and monitor it, and we'll keep you up to date as things change. Days in MLS. Days in MLS have been slowly ticking up to now 11 days on average for the MLS, which is still nothing. Month supply of inventory. We had 1.9 months supply of inventory in July. We now have 1.7 months of inventory. What does that mean? If we are cyclically in the same pattern that we have been over the summer months for the past 20, 30 plus years, what this means is that inventory will continue to drop until we get to the late winter, spring months, which are historically some of the strongest selling months of the year from end of February until about the beginning of May. So we're still preparing for that to be our busiest season here. So percentage of closed price to list price. This is always an interesting number. So we can see in April, people were paying essentially 5% over for whatever was on the market at the time. Now we're closing right at about 100%. So nothing too crazy there. We're getting around asking price if you're priced appropriately. How many showings to get to go under contract? This has fallen well off the radar. We're down to 8, 9 showings per going under contract. Versus, earlier in the year we had 20 plus showings before we went under contract on everything. If we look historically, though, we can see over time about 10 showings on average to go under contract. Prior to the last 8 years or so, which has been pretty historically crazy all over the country for real estate, it was common knowledge that if you had about 12 showings on your listings and did not go under contract, you might be overpriced and it might be time to make a price adjustment. We're working a little bit more towards that in a balanced market, so just keep that in your mind when you have showings on your listings, is that if you got over 12 or so and you don't have an offer in hand yet, you might be a bit overpriced. All right, so what we're looking at here is Redfin's data. They actually have a really robust data center. I love looking at it to get a broader picture of what the entire market is doing versus just what's happening here in Denver and Colorado. So what we can see here is under new listings. Now this is showing just for the year 2022 is that we started, with about 47,000 new listings to hit the market. We've peaked out, close to these summer months here with about 115,000 new listings, and now we're starting to trail down again, which is great, which means we're just not getting this flood of new inventory, which will help balance out prices a bit. The number of pending sales this year has stayed relatively high. Now let's look in 2021 and compare what we saw. So 2021, we saw more pending sales than we have in 2022 so far. Let's go back to 2020. We see this big drop over March, and we all know why. And then it started to tick up, and then it's passed us so far in 2022. But now let's look at 2019, which was more of a standard market that we were all used to. 2019 pending numbers over the entire country are less than what we have in 2022. Let me repeat that. The amount of pending sales in the entire United States in 2019 pre-pandemic were less than our current pending sales in the entire U.S. Now, let's look at the number of homes sold. In 2022, we can see peaking out a little bit over the summer months, trailing down just a little bit towards the end of the summer. Let's look back at 2019 and see pretty similar charts. Nothing too out of the ordinary. Let's look at the median sales price. So this is an interesting one. Starting from the beginning of the year, we can see in the U.S. the median sales price was $352,000. Now, we peaked out in about May at about $390,000. So that's more than a 10% increase in just a few months. It is absolutely wild. Then since then, we have pulled back now to about $370,000 nationwide. So since May, nationwide, we have already had a 5% reduction in closed prices throughout the entire market. However, since the beginning of the year, we're still up 5%. So that's how the numbers are going to read. You just got to dig into this data closely and really check it out for yourself. Let's look at the months of supply. So this is the big drivers, supply and demand. And what we can see here, this is actually showing weeks of supply. And we're showing we're almost at a 12-week supply. So we're almost at 3 months supply of inventory. A balanced market is roughly 5 to 6 months of inventory anywhere in the country. Now, we're going to come down here and look at some of this monthly data that we can see in some of these large areas. And what we're going to see trend-wise is the same exact thing. So the amount of home sales peaks in the summer months, pulls back in the winter. Peaks in the summer, pulls back in the winter. And the same thing presents itself year after year after year. And this year is no different. Have a little bit less than the last couple of years, but the last couple of years have been anything but normal in any capacity. The amount of pending sales, and we see the same chart again, more in the summer, less in the winter. The amount of new listings, and once again, we see more in the summer, less in the winter. The amount of active listings, like this just goes on and on, folks. This is the same record over and over again. And what we can see here is we just ticked above 2021 levels of the amount of active listings on the market. Month supply of inventory is, just look at this. Historically wise, we are still at some of the lowest inventory levels we have ever seen. It just feels a little different because of this knee-jerk reaction from super duper duper hyper to, hey, well, we're going to chill out a little bit and be a little bit more balanced. So if you're selling on the market, just take a breather. You got to be more prepared for it. You've got to understand you might get 10 showings before going under contract, and those showings might take 2 to 4 weeks to get there. Wrapping up this 2022 summer in the real estate market has really just felt like a reaction to the absolute insanity we've had over the last year and a half, where home sales were going up 10, 15% a quarter in some places, which is not sustainable. Our job market is still extremely strong until those jobs start to reverse somehow, and we don't know how it's going to happen. I think we're still in a fairly decent market. Real estate wise, it's just getting balanced out a little bit, folks, and it takes a little bit of pain just to feel like, okay, we're evening out here, we're starting to tread water again. Great. Now buyers have the chance to get in and not have to make a decision within literally hours. Remember this, folks. A few months ago, people were offering $50,000 to $250,000 over asking price within hours of it hitting the market. That is not normal. It's not safe. It's not comfortable for anybody. And now we're just getting a chance to breathe a little bit. So temper your expectations. Get your house prepared for sale. If you're on the sell side, if you're on the buy side, get a good agent to walk you through and have a chance to get what you want to get. It's been so uncomfortable to make the lateral moves in Denver over the last year and a half that now you can make those moves appropriately. You can plan things. You can time it out a bit better. So I'm just glad we're going into a little bit more balanced market. And yeah, us as agents, we're going to have to work a little bit harder to get things sold, but it also gives us a chance to work with buyers and get people into the homes that they love. So once again, I'm here. If you got any questions and if you found this valuable, please make sure to subscribe, like this, and until the next time, happy housing.